Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the opening action, the trading setup and all the market strategies that you need to know for this fresh and new day. Remember, the Nifty index is set to return to weekly gains this time around as we are stepping into the final day of the trading session of the first week of September. Remember, it's the GST cut cheer that brought in the cheer all through this week, but it was short-lived. As of yesterday, we did see that despite the stock-specific moves that continued to rally in high single and also in double digits, the index did correct over 250 odd points from the day's high point of the day to end nearly at the same level as that of Wednesday as well. So where is the pain? The pain lies in the banking sector, which corrected, the index itself corrected 450 points from the day's high. Look at even the broader markets where the mid-cap index fell nearly 1,000 points from the day's high as well. So that's where the higher levels are not getting sustained is the key problem. Now, when we look at what is the overall setup from across the globe, US equities, they hit highs right ahead of the pivotal jobs data tonight. We did see S&P 500 up by 0.8%, NASDAQ also jumping by about 1% in trade. Remember, US August jobs data is tonight and that's going to be a critical one to watch out for. On the commodity front, Brent oil did slip by over 1% at $66.85 a barrel. There are concerns that OPEC Plus will once again bolster supplies by Sunday, and that's keeping the sentiments on the crude oil under check. What about the Asian markets? Most equity markets in Asia did advance, tracking the global rally on the Wall Street as key data points reinforced the expectations of a September rate cut by the US Federal Reserve. Now, the MSCI AC Asia Pacific Index was up by about 0.5%. We've also seen Japan's Nikkei up by about 0.7% in trade. Hang Seng China both up in trade. Kospi also slightly higher. And we're also looking at the GIFT Nifty trends that are pointing out to a slightly positive start as well. So we'll look at how the markets really shape up in today's trading session. What happened on the foreign investors side? Well, foreign investors did pour in some money in the Indian markets, almost minuscule offer about 11.7 odd crore rupees after days of sell-off that we've been seeing. Look at the domestic institutional investors. They continue to net buy the shares worth about 2,171 odd crore rupees on Thursday as well. There are several of the stocks that we will continue to watch out for, but let's welcome our guest on board. We are joined by our special guest, Mr. Mayuresh Joshi, Head of Equity Research at William O'Neill India, now joining in on the program with us. Warm welcome to you, Mayuresh, and thank you so much for taking the time out. Well, the big GST bonanza came in, and yet the markets did not show us an enthusiasm that we would have really liked to see. What do you think is keeping the sentiments under check, and why do you think the markets are unable to really sustain the rallies on the higher side despite a positive GDP number and the GST bonanza as well? These are the reforms that have not been seen in the last couple of years, and these are outside of the budget that are coming in. Despite all of that, the markets are not cheering the way we would have probably wanted to see.
Morning, Sakshi. I think it is excellent news in terms of GST rationalization, and the markets are trying to take it in its stride. I think two reasons. One, I think in terms of non-clarity, in terms of the compensation cess part, I think that is where the street is probably looking forward to. And secondly, I think for certain slabs which are now being exempt, I think input tax credit comes off completely. And therefore, I think the enthusiasm, as an example that you saw in insurance stocks, I think came up at the end of the day. Therefore, I think the market is trying to take it in its stride. But in my opinion, again, I think it's a very, very positive step. It's a big reform that the central government has probably done. And therefore, I think in terms of a consumption boost that the economy so direly needs, you had started seeing green shoots of rural consumption coming back, urban consumption stabilizing. But you wanted those consumption trends to go higher. And with these rationalizations that have taken place, those trends will start coming back. So in my own sense, I think as we head into quarter three, because this will get implemented around September 22nd, so the implied effect will be seen in quarter three in conjunction with the festive season as well and thereof. So in my opinion, again, excellent move. The markets are just trying to take it in its stride as we speak. But I think the results will start showing as we see Q3 numbers. So in my opinion, I think markets are looking forward to some element of resolution on the Trump tariffs, specifically the additional 25%. And if that probably happens and some resolution thereof, I think the resistance that the market is probably facing in terms of the impact of GDP because of Trump tariffs getting offset because of the GST rationalization moves. I think we can get that impetus that the market is so eagerly waiting for. From an earnings perspective, again, I think earnings should also start stabilizing as we head into Q3. And therefore, I think you've got a combination where earnings expectation in terms of GST rationalization, aiding consumption and GDP growth, and some element of hope or retrieval in terms of Trump tariffs. I think a combination of all these factors can actually take the markets out of this consolidation phase and probably get that premium status back for India. So I'm not overly perturbed. I think markets have just taken yesterday's rationalization measures into their stride. But I think it's a very, very good and positive move with the markets will reward as we head into Q3.
Absolutely. So let's come to the specific GST sectors. We've seen so many of the sectors react positively to the rationalization news and the tax cuts as well. How are you looking at this fresh wave of money to pour in, and how would you really take a benefit as a market participant as the festive season is upon us and we will start to see some effect from September 22nd? So how would you like to play this in the markets? Meanwhile, just marking out for our viewers, the pre-open take 0.7% higher, 24,917. Keep an eye out on that one, viewers.
I think it should be taken very positively. I think most sectors within the consumption basket should react very, very positively. So I think consumption is not just restricted to FMCG, Sakshi. So I think you've got consumer durables, which is your AC makers, refrigerators. I think the hope here is that there will be some element of a structural volume growth that probably happens. I think with the GST rationalization, because a large part of the consumption patterns are largely driven by rural and semi-urban. 60% of FMCG sales happen in rural India, and the rest probably divided into semi-urban and urban. And therefore, I think it will be a bottom-up consumption story where FMCG players will benefit significantly from the moves that the GST rationalization has done, both in terms of volumes, expectations in terms of the grammage reductions that they've probably done to probably ensure that their margins probably sustain with input costs stabilizing. I think they've got that leeway in terms of margin expansion as well, which gives them that advantage of operating leverage actually. So even if I think the items in terms of absolute value might be small, say biscuit packs at 5 rupees, 10 rupees, you're probably looking at toothpaste, you're looking at talcum powder, you're looking at hair oils, which might not be as expensive as the durable items, but I think the volumes will play a huge part here. Similarly, I think stationery makers, I think it's actually become exempt. So I think there can be a huge pullback that happens for a lot of these stationery players. Footwear, domestic apparel players, as I've been always saying, I think that rate has gone up from 1,000 to 2,500 rupees. Medical equipment, I think, has become cheaper. Critical drugs have become cheaper. Therefore, hospital stocks should continue benefiting. Consumer durables as well. I think there should be some element of a structural uptake. And therefore, I think consumption as a basket and subsectors within that, I think you should see some element of a sustained earnings momentum coming back and sustaining going forward.
Absolutely. We'll dig a little deeper to cull out some names from all of these sectors for you, but I just wanted to take a broader sense on why the banks are still lagging at this point in time. Don't you think that banks, NBFCs will also stand to benefit once the demand for consumer durables for autos rise? Eventually, the credit demand will move up, and this festive season, even they can expect for a lot of financing vis-a-vis the previous some festive seasons as well.
Well, absolutely, they should, right? And therefore, I think the three reasons why banks are lagging behind. One, I think the fear on the street is that credit deposit ratios might remain skewed. Reason being, deposit growth might actually remain a little bit under the radar with interest rates coming down. But how that plays out is something to be seen. The second element is in terms of the riskier loans that are probably expected to be given out in situations like these. And therefore, the fear on the street is that if there are risk-weighted loans which increase on the bank's balance sheet, that might increase delinquencies as we head into the next few quarters. And the third element again is that the compression in NIMs and spreads that you've probably seen for the sector as a whole, will that continue? Now, to counter all this, I think my own sense is that with interest rates coming down, deposits might lag. But again, I think you should see sustained element of reasonable growth coming through. And therefore, credit deposit ratios should remain relatively better. You're absolutely right. When consumer durable loans start picking up, the extent in terms of credit expansion in the economy, both in terms of not just consumer spending, but even government and private capex spending, should also increase. You've seen government
Recording
capex
stopped.
actually increase substantially. NIMs and spreads have actually compressed, so I don't believe that there should be any further compression here. That probably happens. In fact, the lending rate should also reset with a quarter's lag effect. And the third part, in terms of delinquencies, the banks are well monitored by the regulator, which is the RBI, in terms of the risk-weighted assets. And the street is also clearly monitoring these aspects very, very closely. And therefore, I think leadership stocks within banks, stroke NBFCs, in my opinion, have seen the worst behind them. I think they might just consolidate looking at how Q2 numbers play out. But in my opinion, in the larger sense, over the next few quarters, capital will be required across different sub-segments of the economy, which the banks and the NBFCs can provide, and therefore can give a leg up in terms of sustained earnings.
Absolutely. Let me also ask you on the insurance aspect as well. There is so much of discussion taking place as to whether an exemption from GST on both life and health insurance, of course, it looks like a great step there. Something which is of a necessity and not seen as a luxury should not be taxed. And that's been our own campaign also from Business Today. For at least 3 to 4 years, we've been putting that request forward to the government. And finally, the government has paid heed to it. But the industry is of the view that exemption may not mean that, the entire benefit will stay for a long time. Even if it is passed on immediately from the industry, it will be difficult to see whether it gets sustained, because the industry still stands to lose out on the input tax credit benefit. And even if they are able to cover some costs because of the reinsurance bit coming in, how long will that be able to cover those costs is something that they are not sure about, and therefore they do believe at some stage they may have to hike the premiums, and then it will be again back to square zero for whether the end user will find a health and life insurance affordable. So how are you looking at the insurance space?
No, I think precisely the points you put out, Sakshi. Again, I think if you probably look at the costs of acquiring any premium as a policy, I think it's almost 70 odd percent. Now, earlier in the GST regime, when you had the input tax credit available, I think that 18% used to get offset in terms of costs. And therefore, I think it was a tad bit easier on insurance companies' balance sheet, whether life or health, to probably sustain that kind of premium growth, because that input tax credit deductible was allowed onto their P&L. Now, with that input tax credit allowable on, I think the extent in which that cost will probably remain higher. I think that is going to be a challenge on their P&Ls as well. Obviously, I think from an end consumer perspective, the benefits will get passed on. So I think the premiums will obviously become a tad bit cheaper for all of us insurance-paying consumers. But for the insurer companies itself, I think this is one challenge that they're probably expected to face. And therefore, that is the fear on the street, that if it's a reversal of sorts, or whether the premiums are not fully passed on, how much do PNLs probably absorb? And therefore, that's what I said, that the enthusiasm with life insurance stocks went up, I think that whole enthusiasm was ballooned out. Because once these factors came at play, I think it was very, very evident that there is not going to be a significant amount of P&L accretion happening on a lot of insurance company balance sheets. So now let's see how this develops. I think a lot of insurance companies are in a wait and watch mode to see the exact impact that probably happens on their individual clients.
Okay, fair point. Let me just quickly look at how the markets have settled in the pre-open. On the Nifty, you have 24,818 and 84 point of a bump ups. That means a 0.3% of a higher take is what we could expect. Above 24,800 to start off with. Again, autos could be in a fast lane. You can see about a 0.6% of an uptick there. FMCG consumer durables could continue to move up as well. Even the banks, for that matter, at least they are starting off on a positive note, as we are given to understand. When we look at the top stocks, Eternal, M&M, Bajaj Finance, Bajaj Finserv, these are some names that could be hovering higher right at the pre-open trade. So we'll come back to the markets at 9:15, but let's discuss a little bit more. Let's also discuss the other aspect, the 40% tax slab that's been put on sin goods and on super luxury goods as well, or services. So let's actually try and understand on goods, for instance, tobacco, pan masala, aerated beverages. There's a lot of discussion on whether even those drinks that are used by sportsmen to keep them sustained and to nourish, they are also getting expensive. So that's another debate. But at this point in time, how are you looking at the impact on such companies that deal with aerated beverages or tobacco, pan masala? How are you looking at that?
So largely, again, I think if you probably look at the earlier rates, I think more or less in tandem in lieu with that. And therefore, the fear on the street was whether there will be some element of a higher rate over and above 40. So whether there's going to be some surcharge or cess over and above that, that's not probably come. So I think in a nutshell, I think that's probably kind of a relief for these stocks, because the expectation largely, as I said, was much higher rates coming through. Obviously, I think for beverages and soft drinks, it has gone higher. So from 28, it has gone to 40%. So there will be some element of an impact that happens in terms of the end selling prices. And how much of an impact does that probably have in terms of the end consumer? Is this something to be seen? Obviously, I think there will be some element of impact in terms of volumes. And if there is an impact of volumes in some fashion or the other, you obviously get impacted by revenue loss. But again, with the rise in revenues, it probably compensates or offset. But there will be some element of capping up of revenues that probably happens. So yeah, I think earnings expansion for stocks which are having dedicated revenues from these streams, the earnings might probably get capped.
Absolutely. What about names like ITC, Godfrey Phillips? We've been actually seeing them up and about since yesterday. There was no immediate knee-jerk reaction on the downside of the 40% taxes on these goods. How are you looking at the reaction there? Is it justified? See, ITC, we do know it's a larger conglomerate, could be probably reacting to an FMCG, consumer durables. What about the other stocks, and what's the understanding there?
No, again, I think demand inelasticity, Sakshi. I think the guys who are having cigarettes will keep on having cigarettes. Maybe the number of sticks might reduce by one or two or whatever. I think that number is, but it hardly creates a difference, I think. And therefore, I think you've also seen this in the past, that it hardly creates an impact in terms of numbers. Volumes tad bit affected, get compensated by the kind of price increases that happen per stick.
Absolutely. Let's also try and understand when it comes to, the kind of gaming companies are concerned. They reacted negatively for sure. Delta Corp, Nazara. Is it the best time to stay away? Because there is so much happening. We just had the online gaming bill. That was also a negative scene for a lot of, industry players. They're now shifting their strategies to, non-paid kind of sports at this point in time. And now you have an additional tax. How are you looking at all of that?
No, Sakshi, I've always believed that sectors which have a lot of regulatory overhang, these sectors should be something that investors should stay away with, because you are not really sure of what can happen. If something positive happens, well and good. But these sectors are always under the scanner, specifically from the regulator. And therefore, I think staying away is the best mantra, in my opinion. I think there are far better sectors to probably have a much better, safer bet and a better risk reward scenario, in my opinion.
Okay, fair point. Let me also draw your attention, Mayuresh, to the auto space at large, and help us understand how are you looking at it, because a large part of the sector definitely benefits a lot, because small cars, two-wheelers below 350cc, they are starting to benefit. Even the large SUVs stand to benefit somehow, because the overall 40% tax also will be lesser than the 28% plus the 22% cess put together. That would have been closer to 48-50% odd. So still you stand to benefit. I think the only segment that stands to lose out is the bikes above 350cc. How are you looking at these new taxes, and how would your choice of stocks then flow in now?
I think it's positive, right? And you're absolutely right. I think even for the higher end SUVs, including the compensation cess, it was anywhere between 44 to 50%. So it's much lesser on. Even tractors are now at a lesser GST rate, including their spare parts. So I think autos generally should do well. We've always maintained a positive and optimistic stance. Hyundai, TVS Motor, Hero continue in our global and domestic portfolios. Our sense is that volumes should sustain going forward with interest rates coming down. The ownership also, along with GST rationalization, the ownership costs probably come down. And therefore, I think with new launches that are happening, input costs, which are largely stabilized, will probably add to margins. Even in iShares case, I think almost 80% of their portfolio is less than 350cc, where I think some on the street believe that a large part of their portfolio is above 350cc. But again, even above 350cc, Sakshi, I think what you've obviously seen, and even the premium cars, in a lull period, I think this segment was doing extremely well. So again, I think the higher discretionary spending has sustained and might continue sustaining as well. So I think yes, autos selectively, as I said, might continue to.
Okay, got that. Just a minute to go before the markets open up. So let's shift focus to what we could see in the markets today. Again, we are looking at auto segment, NBFCs, banks, and we're also looking at the insurance basket names, FMCG, consumer durables that could be opening in the positive zone right now. I only see some metals, oil and gas, slight dips there, but rest of the sectors could actually be opening on a positive zone, at least for now. Let's also see what happens on the sectors that have not been hit too badly as well, as far as the taxes are concerned, and those that are benefiting the most. We're also looking at the broader markets meanwhile, viewers. Both are opening higher, but let's see whether that sustains. So 24,811, the first tick on the Nifty, 70 points higher. We've opened above 24,800, and the key stocks that are opening higher is SBI Life, M&M, Bajaj Finance, Axis Bank and Bajaj Finserv on the positive end as far as the Nifty movers are concerned. On the downside, you only have, say, about one or two stocks that are declining, JSW Steel for that matter, and Titan Food, as another stock that is declining, but rest all of the stocks are opening higher. Look at the sectors. Autos definitely up by about 0.8%. You have media stocks that are higher by 0.5%. Real estate up by 0.5%. Small caps up by 0.4% as well. We are also looking at financial services, PSU banks also ticking higher, 0.3% higher. FMCG is now seeing some profits being taken off, so we'll keep an eye out on that. India Wix is lower in trade. Top stocks within the Nifty 500 basket, any of those that we could mark out for our viewers right now? Well, you have some smaller hotel stocks that are moving up, like a Blue Coast Hotel. You have Sterlite Technologies that's up in trade. You also have Andhra Cements that's higher from the cement space. That's something that we could definitely focus on as well. We're also looking at names like Mostrip Technologies that's higher. Let's me also pull up some of the other stocks. Swan Defense is higher in trade. So Omkar Specialty Chemicals, that's another one that's also on the move. But let's discuss cement, construction and those spaces as well. Cement is also starting to benefit from the reduction from 28% to 18%. Mayuresh, how are you looking at the cement basket at large?
The rationalization has no immediate benefits from a rationalization perspective for the sector. But what it really does is, with input costs coming down and expectations of capex, as I said, specifically the government capex on rural and affordable housing, I think it has a significant impact in terms of volumes. Obviously, Q2 volumes because of monsoons will be a tad bit lower, but I think Q3 onwards, volume pickup should be evident. And with the expectations of stability on prices and realizations, whether it's gray or white cement, I think that should sustain going forward. With input costs, as I said, both because of rationalization as well as input costs actually coming down because of the back-end efforts that they've done, along with a lot of the power initiatives, which are now entirely internally driven for most companies, the EBITDA per ton should show expansion. And that should have implied effects in terms of bottom line growth. So anybody holding good leadership stocks where ratings, rankings, or parameters on CanSlim probably get fulfilled, stocks like Ultratech, JK Cement might actually continue holding.
Okay, fair point. Let me also just welcome Kunal V. Parar, Vice President Technical Research at Choice Equity, now joining in on the program to help us with the technicals and the outlook there on the markets. Good morning to you, Kunal. Tell me, how are you looking at markets above 24,800? Will it sustain? And on a weekly level, are we looking at gains to end with?
Well, good morning, both of you. Right now, Nifty is trading at 24,808 level. It is sustaining above its 100 days moving average. So let's say if give its weekly close above this level, then yeah, we may see a further upside momentum in the index up to the level of 25,250. So Nifty has to give its close about 24,800 during today's weekly close, and 25,250 would be the expectation. And if you talk about lower side, then downside support comes at 24,400, 24,350. However, overall expectation is on upper side only. And if you talk about Bank Nifty, then right now Bank Nifty is trading at 54,231. Bank Nifty has a strong support at 53,500. And during yesterday's trading session, Bank Nifty gave its breakout of its end-bound momentum. So we may see some good upside momentum up to the level of 54,900 to 55,500 level. So in both the index, we are expecting some good upside momentum.
Okay, fair point. I hope this has also given you some understanding as to how to look at the current setup. Kunal, two stock ideas from your end today?
Well, two stocks are there which looks very attractive. First is HDFC Bank. The way stock has been trading on its daily chart during yesterday's trading session, it started to trade above its 100 days moving average, and it gives some kind of confidence as well. Not only this stock has formed its bullish engulfing formation on a bottom side, and we have seen some good bounce back during yesterday's trading session. So this indication may lead further rally in the counter as well from the present level. Right now, stock is trading at 965. We will keep myself at 940, and if you talk about the target wise, the first target comes at 980, 980, which is its 100 days moving average. And if stock sustain above this level, then one way rally would be there up to the level of 1020. So first pick from my side is HDFC Bank, and second one is a Kolpal. The way stock has been trading on its daily chart, we may see a good upside momentum. We have seen a good breakout on a daily chart of its recent top, which was placed at 2400. Right now, stock is trading at 2452. Not only this, stock has been trading above its 100 days moving average since last two trading sessions, so it clearly indicates for good some upside momentum. So one can get into the stock at present level. Right now, stock is trading at 2453. We will keep SL at 2420. And if we talk about target wise, first target comes at 2510. And if stock break this level, then further upside would be there up to the
Sure.
level of 2570. So Kolpal and HDFC Bank, it's from my side.
Okay, got that. Some more stocks that are pulling up ahead in the Nifty 500 basket. Look at Prime Focus, viewers. There's been a large trade that's taken place. 1.5% of an equity has exchanged hand in the block deal window. Remember, Prime Focus is the company that's provided visual effects or VFX for Nitesh Tiwari's epic film Ramayana, and therefore you see about a 10% uptick on this one. So keep an eye out on that as well. We're also looking at several other stocks, but let me come back to Mayuresh on the broader discussion of the GST and the benefits that are coming in various sectors. Mayuresh, talking about textiles and apparels, how are you looking at this space? And, would you look at the makers, or would you look at the retail spaces at this point in time to take the benefits there? All the clothes that are below 2,500 rupees will be taxed lower at 5% now. So a mass volume uptick is what these companies could be expecting in the upcoming festive season. How would you look at this space?
That might actually happen, Sakshi. So again, I think a few of the domestic apparel makers should continue doing well. Again, I think it's going to be a bottom-up story, and therefore stocks like a Vishal Mega Mart, a V-Mart Retail. I think you've seen a large part of their apparel portfolio actually priced around 500 or below that. But a decent portion is also about 1,000 odd rupees. And therefore, I think they should start benefiting quite significantly. I think the best part that's going to be, Sakshi, is that any stores or apparel makers that were selling at around 2,700, 2,800 might actually get their stock down below 2,500 to actually take the benefit of all this. So yeah, I think domestic apparel makers might continue doing well. We remain optimistic on stocks like a Vishal Mega Mart, V-Mart Retail. Clear disclaimer, we might be holding these stocks in our global and local portfolios.
Okay. What about namkeens and your favorite stock, Bikaji Foods? Mayuresh, how are you looking at that? Again, some more benefits ahead of the festive season. 5% now for namkeens as well.
Yeah, absolutely. I think and that does give a boost to Bikaji as well, because I think a large part of their portfolio, which was sweets and sugar, which was a decent part, was at 5%. But now a large part of their portfolio, if I'm not mistaken, more than 90% will come at that 5% bracket, which is a huge positive. What it actually does, Sakshi, I think the GST rationalization is that a lot of the unorganized players was actually benefiting because of the higher tax rates on organized players. And therefore, the cost advantage and the price advantage was quite significant. With the rationalization that has happened across categories now, you're actually expected to see selling prices start coming down because of GST prices going down. And therefore, the competition intensity of organized players versus unorganized is going to improve quite significantly across these subsegments, including namkeens, including a lot of items within the consumption, lower end of the consumption basket, which are consumed by rural and semi-urban areas. And therefore, I think a large part of the organized trade will actually improve quite significantly, which is a huge positive for these guys in terms of volume price. So yeah, I think there are a lot of positives that these rationalization moves can bring about.
Okay, got that. But I think good part is that the popcorn debate is settled for good now, you know. That's something that a lot of our viewers would be, relieved about. Even caramel now comes under that 5% basket. So no more discussion on that. Yes, Mayuresh, please.
No, I always dreaded having popcorn. वो popcorn का भाव देख के मेरे को डर लगता था theaters में. So
Yes, that's a sensitive topic.
हाँ,
Kunal,
exactly.
Kunal, what about you? What are you happy and unhappy about on the GST cuts?
Hello.
Kunal. Yes, Kunal, I wanted to ask you, what are you happy and unhappy about the GST cuts?
Definitely, but yes, it will have a direct impact on all this stuff. But frankly saying, I am not aligned with this based on my ongoing diets. So no doubt, it will have some positive impact, and we may see some kind of good upside momentum and good consumption after this Diwali. And I think it will take more first quarter to get into the overall picture. But yes, this GST cut will have a larger degree impact on on our consumption theory that we had hit during this tariff war. So overall picture looks very good. But yeah, if you ask me for my personal preference, then I'm not aligned with this anymore.
Okay. Mayuresh, tell me, when we talk about a lot of benefits coming even for the healthcare sector, medical devices, medicines for that matter, how are you looking at, some pharma companies, healthcare companies at large, hospitals? Where do you think the benefits would accrue?
No, the hospitals will benefit, as I said, because critical drugs going up, equipment costs going down for hospital players. And again, I think hospital players never really enjoyed the entire GST benefit. But with all these equipment that is probably needed to come through, I think that probably reduces their cost reasonably well. And you're obviously seeing hospital players execute well in terms of earnings, and that might continue because their strategy has been pretty simple. Instead of going full blown in terms of capital expenditure, they are having managed hospitals, they're tying up, they're having reasonable amount of brownfield expansions, which is putting a cap in terms of their debt and leverage levels. And therefore, hospital stocks could continue doing well. But even a manufacturer of medical equipments like a Polymed, I was hearing the management on one of your competitor business channels, they sounded optimistic because with the GST cuts now going down significantly, I think what really happens in their case is offtake might happen quite significantly. And even they benefit because there is a large part of the unorganized market out there which was having that arbitrage benefit, which actually goes away and in favor of organized players. So I think Polymedicure, which manufactures a lot of medical equipments, might actually come back into the focus as we speak.
Okay, got that. So that's the healthcare pack for you. But I think it's the autos that are taking fastest at this point in time, top movers, and those are. This is the space that has really reacted a lot to the GST news. Kunal, top choice of stocks within the auto basket. Would you still stick with an M&M?
Well, definitely, main beneficiaries is auto sectors only, and out of these auto sectors, I need 2 to 3 stocks there, which looks very attractive. M&M is there, Maruti is there, Eicher Motor is there, because but obviously government is spending on the consumer theory, and based on this rate cut, all these stocks, particularly in the auto sectors, have been they will be like more beneficiaries of this GST cuts, and definitely my first choice would be the M&M. It's up by 2% right now, trading at 3541, and further upside would be there in M&M. The way stock has been trading on this daily chart, we may see a further upside momentum in this counter. One can get into this tech at present level with strict stop loss of 3460, and if you talk about upper side target, we may see a good upside momentum up to the level 3650. Not only this, if stock sustain above this level, then further upside would be there up to the level of 3800. So but obviously M&M looks very attractive after this GST rate cuts, and since long we have been continuously suggesting to get into this stock for long term portfolio creation when stock was trading at 2800 to 3000 level. So now from the further level, we may say good upside momentum. Not only this, one should talk on TVS model from the two wheelers, because right now in market highest TVS model is selling its electric vehicle, and if we talk about two wheelers, then it's a Jupiter is like a hot cake right now. So TVS motor will have a direct benefit of this GST rate cut. Right now TVS is trading at 3468 level. One can get into the stock free with strict stop loss of 3360. And if you talk about target wise, first target comes at 3540, and if stock break this level, then further upside would be there up to the level of 3630. So from four wheeler, it's a M&M. But double benefit will be there from a passenger vehicle and a tractor side, and from two wheeler it's a TVS motor from ICE and a electric vehicle.
Okay, Mahdesh, coming to you for the last word now. When we talk about the festive season upcoming, where do you think the outperformance will lie?
Selective FMCG, I think the consumption space should move higher. Domestic apparel makers, as we discussed, certain footwear companies should continue doing well, in my opinion. A few of the domestic themes within agrochemicals, capital expenditure players should continue doing well, because I think the government focus will now clearly shift in terms of boosting the infrastructure or the capital expenditure part across various subsegments, whether it's rural, urban affordable housing, metro link, ports, and therefore infra development will continue at a very, very ferocious pace. Private capex expected to come back. And therefore, a large part of the pool will be veered towards consumption. But I think a few of these capital-oriented projects, domestically driven, I think they should continue doing well. So I think earnings should start picking up from Q3. My own hope is that the consolidation that we are largely seeing, Sakshi, should get over in the next few weeks, and India should come back to its premium status as we head into Q3.
Fantastic. So, a few more weeks of consolidation and then we could be coming to push higher. Thank you so much, Mayuresh, for being with us. Always a pleasure to host you with us, and thank you so much for all that time that you have given to us. Always a pleasure. Thank you.
Thanks,
Let me look at the markets yet again. We've tad bit slipped below the 24,800 odd mark, but we're still holding up. But a lot of other stocks that are in focus. Let's pull up the Adani group of stocks that are in focus, especially Adani Power. The shareholders have approved a 5-for-1 stock split, which the board had approved while announcing the company's June quarterly earnings, viewers. So finally, this has been approved by the shareholders. The record date for the stock split will be, of course, announced later separately, but the company has informed that a 5-for-1 stock split will be coming into focus as well. Remember, for the quarter ended June, Adani Power had also reported a consolidated net profit of about 3,380 odd crore rupees. We've also seen a revenue of over 14,000 odd crores for the company coming in as well. And now the stock split news is going to be bringing the stock back into focus. Tell me, how are you looking at this, Kunal? Adani Power, should one start looking at investing in Adani Power before the stock split to take the benefit of 5-for-1?
Well, it's a split, so if you invest right now or after a split, no one will get that much of benefit. But yes, if you look at the overall picture right now, Adani is trading at 607 with positive crossover of its 100 and 200 days moving away. So its overall picture, overall structure is on upside. And since last many days, stock has been trading in its upper rising channel formation with RSI trending over 50 marks. So overall picture, overall equation looks very attractive at present level and suggesting to go for long at the account at present level. So one can get into the stock at present level. And if you talk about trading perspective, one can keep SL at 570. And if you talk about target wise, the way stock has been trading on its daily chart with positive crossover of 100 into 200, good upside momentum would be there up to the level of 635 to 680. Now this is for trading perspective, but yeah, the long-term perspective looks very good. Even we may see good upside momentum beyond the 700 levels, and after split, even the may spurt further. So for trading perspective, short term to medium term, this stock looks very good, attractive at present level.
Okay, got that. Let me just also focus on some of the other pockets that we can draw your attention to. Mid caps and small caps are now driving up. Sub moves, we are also looking at the mid caps among the top moving sectors now. 3% uptick for BSE is the leading stock on mid caps. You have Aditya Birla Capital, Max Financial. You also have a Paytm that's up by 2%. Vishal Mega Mart is higher. Glenmark Pharma, Indus Towers from the telecom infra space is also up in trade. Look at L&T Finance, Hoodco. These are all the stocks from various sectors that are contributing to the gains, pulling up even small caps. That's also performing in tow with the mid-cap names. Brainbees Solutions 2.5% higher, the parent company of First Cry. Amber Enterprises is up. Reliance Power, CAMS is higher, KFintech. So on the one hand, I do find a lot of capital markets related stocks that are actually moving higher in trade. On the other hand, it's largely the retail space that's also pulling up too. So let's pull up the capital market story for you, Kunal. BSC, CAMS, KFintech, Nuvama Wealth, Angel One, all of them pulling up. Which one would you prefer within the capital markets? Should one again bet big on this space?
Well, if you talk about capital market space, BSC being good at daily chart right now. Not only this K fintech, CAMs are also doing very good. If you talk about overall larger degree, then all these stock market stocks are doing very good. And let's pull out the chart of BSC. Recently this stock has taken the support of its 200 days moving average, and not only this, stock has formed its bullish ceramic candlesticks formation along with the strong support of 200 days moving average. So bullish structure is there, based on which we may see some good upside momentum in the counter. Right now stock is trading at 2289 level. One can get into stock at present level with trading SL at 2190 level. And if you talk about target wise, the way stock has been trading on its daily chart, we may see a very good upside momentum up to the level of 2360, 2360, and if stock breaks this level, then further upside would be there up to the level of 2480. So trading perspective, BSC looks very attractive. Not only this, let's talk on the CAMs as well. From the small cap, I think CAMs do some good for our viewers. Right now CAMs is trading at 3829. Since last many days stock has been continuously taking support of its 3600 level, and giving a good bounce back. So same replicate momentum we can expect at present level. Right now CAMS is trading at 3830 level. One can get into the stack at present level, and we will keep SL at 3740. And if you talk about target wise, first target comes at 3900, and if stock break this level, then further upside will be there up to the level of 4010. So from capital market stocks, I think BSC and CAMS both looks very attractive.
Okay, fair point. I hope this has also given you some understanding there. Let me pull up some of the other spaces. I think EMS space is also pulling up pretty smartly. Amber Enterprises, Keynes Technology, Dixon, they have been on an upward move since the time Semicon was also announced. Your sense and your top choice within this basket, most of them are slightly more expensive looking stocks on the optics, at least valuation wise. Also there have been a lot of questions on Dixon and Keynes as to how much can they continue to sustain at these peak valuations. How would you look at, because for a lot of investors, for one stock spending about 8,000, spending 17,000-18,000 rupees seems pretty unaffordable. So how would you look at this aspect?
Well, means if you talk about all these stocks, Dixon Technologies, Keynes, Ambers looks very attractive. Now, if we really want to invest, or if we really want to trade these stocks, then I think price shouldn't that much of concern, because it's overall depend on the how much we will get as a return. So let's talk on the Dixon Technologies. Right now trading at 1700-943 level. Stock has already given a breakout of its multiple resistance, which it was placed at the 17,100 level. Right now stock is trading at 1794 level. One can get into the stock with strict stop loss of 17,490. And if you talk about target wise, the way stock has been trading on its daily chart, first target comes at 18,300, and if stock break this level, then further upside would be there up to the level of 18,860. So but obviously Dixon looks very attractive. Not only this, let's talk on the Keynes as well. Keynes Technologies right now trading at attractive level. It's up by 1.5% on a daily chart. Further upside would be there. This counter right now stock is trading at 6873. One can keep SL at 6700. And if we talk about target wise, first target would be at somewhere around 7000. And if stock break this level, then further upside would be there up to the level of 7220. And if you talk about Umber Technologies, right now trading at 750, even this stock looks very attractive. It also has given a breakout of its multiple resistance. So further upside would be there. Right now stock is trading at 7850. One can keep SL at 7600. And if you talk about target wise, first target comes at 8040. And if stock break this level, then further upside would be there up to the level of 8350. So from technical perspective, all these stocks looks very attractive on a daily chart for trading perspective.
Okay, fair point. Pulling up some of the other stocks, Eternal is up by almost 2%. It's the top mover today. Kunal, how do you expect Eternal to continue to move from here? Does it offer any opportunity to even enter at this stage?
Yes, definitely. News was there related to Eternal. They have increased their delivery charges from 10 to 12, aiming Diwali festivals and all. So it will have a positive impact on overall revenue side. Right now, Eternal is trading at 332. One can get into the stock. And if you talk about SL wise, one can keep SL at 320, 320. And if you talk about target wise, first target comes at 341, and if stock break this level, then further upside would be there up to the level of 356. Now this is for trading perspective level, but this stock looks very attractive not only for trading perspective but medium to long term, because stock has been trading in its uncharted territory and with positive volume rhythm. So we may see some good upside momentum even up to the level of 380 to 400 level. So yes, definitely one can get into the stock not only for trading perspective but for medium term to long term perspective as well.
Okay, fair point. Let's look at some of the other stocks and sectors then. What else is ticking? Okay, in the F&O space, I do see some losers where we should be highlighting. ITC and Varun Beverages, both are down in the F&O aspect. Remember, both these stocks are impacted because of the impact of GST because of their segments. For ITC, cigarettes and tobacco products coming under the 40% sin tax, and for Varun Beverages, remember it's the Pepsi company's bottler as well, and that also gets affected because aerated beverages have also come under a 40% tax bracket as well. Now this is despite the fact that Varun Beverages has ensured the joint venture company in India called White Peak Refrigeration to manufacture Visi coolers and other refrigeration equipment as well. So none of that impact coming in. It's been slipping from last 2 days. Varun Beverages has been actually seen a recent outperformer of the past, Kunal. It's really made a lot of money for investors in the past. Wealth creation idea. What next? Do you think because of this added on tax there could be some pressure on Varun Beverages?
Yes, definitely. This stock will be in pressure, and this increase in GST will have more pressure on number as well. Right now, stock is trading at 477, and we may see further downside momentum up to the level of 453, 450. And if stock break this level, then further downside would be there up to the level of 425. So overall picture looks very negative. Overall sentiment looks very negative for this VBL, and I think it will take more time, more than 6 months to 9 months to get out of this. To come up with this negative sentiment. So from my side, it's like a clearly avoiding signal. One should avoid this stock not only for a trading perspective, but at least for medium term perspective. As I said, 6 to 9 months will take for this counter to recover from this selling pressure. And if you talk about ITC as well, ITC also will be impacted negatively. Right now, stock is trading at 406 level, because government has levied 40% GST on sin product, and the way stock has been trading below is 200 days and 100 days moving average. And with this negative sentiment, I think we may see some downside momentum up to the level of 400, and stock break this level, then further downside would be there up to the level of 380. So both these stocks, VBL and ITC from this FMCG counters looks negatively impacted by this GST and may take time to recover themselves.
Absolutely. Let me just read up a few stocks then that have come on top of the brokerage house's radar this morning. We have Reliance Industries that's come on the radar of Jefferies. They have a buy rating here and a 1670 target. They believe the oil to chemicals profitability in first half of 2026 is tracking a 15% year on year full growth forecast and an 8% on strength in auto fuels as well. They are seeing a benefit of the Russian crude oil. A key investor query, was that is it limited to 2.1% of the consolidated FY27 EBITDA? And remember, Jio's impending IPO could also lead to some tariff hikes as well coming in, and therefore looking at an improving visibility on double-digit consolidated EBITDA growth for FY26, EV to EBITDA multiple to also be ripe for inversion. Those are the statements coming in from Jefferies there. Kunal, your thought on Reliance at the current levels? Should one continue to accumulate Reliance Industries ahead of the Jio IPO?
Well, definitely stock looks very attractive and ahead of the G, I think Geo IPO, positive sentiment will be there, and based on this positive sentiment, we may see some good upside momentum even up to the level of 1550 to 1600. Stock has been trading above its 200 days moving average. Recently, stock took the support of the same, and right now stock is trading at 1370 level. Positive crossover there of 100 and 200 days moving average. So overall sentiment looks very attractive from the technical perspective. And if we talk about even fundamental perspective, I think good spot will be there based on this Geo IPO. So yes, definitely one should accumulate this stock, one should get into this stock, and anybody who is looking for a perfect candidate for long-term portfolio creation, I think they should consider Reliance as a first choice. And the stock is trading at 1360 level. If anybody want to keep SL, then they can keep SL at 1330 on a closing basis. On a trading perspective, target comes at 1420, and if stocks break this level, then further upside would be there up to the level of 1550 to 1600. So definitely it looks very attractive, not only for trading perspective, but for both medium term to long term perspective.
Okay, got that. Let's also look at some of the other brokerage updates that have come in. We have a Nomura report on TVS Motors. They believe the buy rating continues for them with a target price of 3,949. They say that the company has launched N-Torque 150 and Orbiter EV scooter that aims to redefine the urban commute. The strategy highlights company's intent to scale the two-wheeler EV space with simultaneously expanding its premium ICE scooter range as well. Now, they estimate the company's EV volumes to grow by 42%, as far as a year-on-year concerned is, jump is concerned over FY26 to FY27. They also believe the company's ICE scooter volumes could also grow by 15% on a year-on-year basis as well. So those are some of the highlights that are coming in from Nomura and TVS Motors. Within the two-wheeler pack, Kunal, if I have to ask you, how would you place a TVS motor as against a Hero or a Bajaj?
Well, definitely, I'm like more bullish on the TVS motor, because if we talk about overall portfolio, then compared to Activa, I think Jupiter is taking the lead in two-wheeler ICE model. Not only this, if you talk about electric vehicle, then TVS is gaining somewhere around 24 to 25% market share in the electric vehicle. So, but obviously, it will have some positive impact on the stock price as well. Right now, stock is trading at 3474 level, and we may see a further upside momentum in the counter from the present level. Now, as we said, the stock looks very attractive. One can keep SL at 3340, and if you talk about target wise, the way stock has been trading on this daily chart, good upside momentum would be there up to the level of 3590, and if stock break this level, then further upside would be there up to the level of 3760 level. Now, these levels are for trading perspective, but yes, if anybody want to get into this stock for long term portfolio creation, then we may see some good upside momentum even up to the level of 4000 to 4200. So amongst the Bajaj Auto, Hero Motocorp, TVS Motor, and ISA Motor, I think TVS Motor looks very attractive.
Okay, got that. All right, then, Kunal. Last word from you then for the day and for the week. How do you expect the markets to, look forward? And of course, for the next week, any strategy that you'd like to recommend?
Yes, definitely one should keep an eye on 24,800 level, which is its 100 days moving average. So Nifty has to sustain above this level. If let's say if we get the weekly closing above this 24,800, then we may see a very good upside momentum during next week up to the level of 2500 250 to 2500 250 to 25,700 level. And if if Nifty fails to sustain above this level, then back to home up to the level of 24,400 to 24,350. So one should keep an eye on 24,800.
All right. Okay, Kunal. Thank you so much then for being with us in the morning edition. And viewers, we'll start to wrap up the morning trade now. A 54 point of an uptick is what you see. Again, there is an attempt to move up from the low point of the day. 24,788 is what we've started, is what, the markets are at after the first half an hour of trade. Let's look at the Nifty movers. You have auto names definitely spearheading the gains. M&M top mover 1.5% higher. Eicher, Maruti, Tata Motors all among the top 5 movers. You have Zomato, that's Eternal, that's also up by 1.5%. Look at auto, that's up by about almost now 1.2% higher. The index as a whole, that's the top moving sector. Pharma follows. Real estate also comes into 4. Let's look at even the broader markets. Mid and small caps are also ticking higher. Now, Nifty Bank as an index and FMCG. These are the 2 sectors that have actually slipped into the red, at least for now. But let's see how this pans out in trade throughout the course of the day. So stay tuned with us on Business Today Television. Market coverage continues on the other side. In case you have any questions, you could continue to send us. We will continue to take that as part of our daily calls show as well. And do stay tuned on to Markets Today and to Business Today Television to continue to decode the GST rationalization and how it benefits you.
Hello and a very warm welcome to Business Today TV. I am Chetan Bhutani. Government has announced a slew of GST reforms, but all is not well.